All right. Contract labor, we talked about that. Like that says, whenever it's 600 or more, you got to issue them that form. Travel and meals. So that's another one. So when you're traveling, we're talking about overnight lodging, transportation expenses, things of that nature. You can use those. So airplane fees, hotels, that sort of thing. You're able to use those. Food while you're traveling. But the food, you can only count 50%. Unless you're a transportation worker, and then you can do 80. Okay? So that's one of those two that people will come in with all their meals, and it's like, well, we only can count half of them. It's just a rule the IRS makes. Possibly could be a question on your exam. It's just one of those things. Now, as far as the software goes, we just always have to make sure whatever we put in, we go back and cheat and make sure it shows 50%. It didn't usually make us do the math beforehand. So it did the math for us, but it is only 50 on the food. Okay. Let's see. And on the wage line, there is an actual wage line. You're going to want to do W-2 employees there, but you're going to do your contract labor on the other line, line 11. So it is going to be a little different. Okay. That other expenses I was telling you about, that's going to go on other expenses, and you can itemize those out if you didn't already put them up in the body of the Schedule C. Okay. And the biggest thing we usually spend time doing is pulling information out of the clients, because they'll come in with one set of information, and then we're like, well, what about this? What about this? Did you think about this? And that's one of those things you just get used to doing it on the fly. Sometimes they'll have a lot of questions as you're talking about it, and they'll think of things too. Used to, if you just had a W-2, there was a form you used to be able to count business expenses on. That no longer exists. So you can only count them now if you're Schedule C. So we had a lot of people that would do that as well. That used phones and traveled for work, but they were, they were a W-2 employee. They used to be able to count those, and now they can't. So, yep. Okay. Let's see. So what you're actually going to get then, that very little last little arrow looking thing over there is your net profit and loss. That's going to be the very bottom of the Schedule C. So that's what actually rolls over to that other Schedule 1 form, is either your total income for the year, if you're in the positive, if it's $7,350, that's what's going to roll to your 1040, okay, to that Schedule 1 of the 1040. If it's a loss, it's going to have that negative in front of it, okay? And then that actually, helps you not pay as much taxes, but then if you're showing a loss, you may not make as much money. So it's kind of a double-edged sword there with profit and loss. QBID, qualified business income. So this is something that was new this last year with some of the tax cuts. There was a tax deduction of up to 20% you could get on the business, a reduction in your taxes. So the bad thing is we didn't have a lot of training on it from corporate, and it was kind of a last minute put in with the Job and Tax Act last year. And our software had a little bit of an error in it early on, and so it wasn't calculating it properly. But this year I'm sure it will be much better because we'll have different software. But we will have to probably mark some questions on QBID. It'll probably be in there. If you'll look on here, it says QBID will be covered more in Textbook 102. Well, we don't do 102, we're just 101. So QBID will probably be something we'll look at more when we do examples. I'll try to pull some of those so you can kind of see how that works and how that's figured. Okay? But just know that that's a tax credit. That's a deduction up to 20% of the qualified business income. Okay? And it is new. Like I said, it's only been around since last year. And I want to say that can only be certain service industries. Not every self-employment business is going to qualify. It has to be a certain service industry. So you have to provide a service to qualify on that. But I will bring in more information on that too. Okay, self-employment taxes. So our system will automatically do that sheet for us in the software. You might want to take down a few little notes on this. We've already, of course, talked about, well, you have to file a self-employment return anyway if you make over 400, okay? If you had a church employee that makes over 108, you would have to pay self-employment tax on that church employee. I've never seen that rule before, but you never know, it could pop up. You probably don't have this page, so just take notes on this one. I don't know if I have to put a self-employment sheet in there or not. I don't think I did. But SE does have its own form. I'll show you. It just goes with the Schedule C. It automatically will be in there because that's where it calculates their tax. Okay? Because if you are self-employed, you have self-employment tax. It's not the same as being a W-2. W-2 has its own tax structure. It's taxed inside of the 1040. Schedule C has an SE, okay, self-employment taxes, that's taxed at its own rate. And where do you think this number at the bottom is going to flow to? It'll eventually flow to the 1040 because everything goes back to the 1040. Even though it has its individual forms that we put information into or that's calculated for us in the software, it all flows back to the 1040. So once we do these on paper, I think you'll understand them a little better as opposed to just informational. But then, yeah, once it's actually in the 1040 and you can see it on the computer, that, oh, I put this in here, it goes here, then I can go look at the big picture 1040 and it rolls over there. Okay? So a lot of these are just worksheets, and then the main information flows to the 1040. And if I didn't print out the SE, I'll print one out before you guys take the competency exam, just so you have it in front of you. Key ideas, I didn't print these because a lot of these you either have the page itself or we've talked about it, or it's just kind of common knowledge. We talked about wages are in line 1, of the 1040. This was a really long, it was almost 100 slides. Tip income, got to be reported, okay? What else? Line 1 could include scholarships, those sorts of things that we talked about earlier that could be taxed. Deferred compensation, we talked about that that's deferred, right? You're expected to pay 90% of your income tax liability as you receive income during the year. I don't know anybody that sticks by that, so that's just the IRS guideline. We talked about withholding in your W-4. We talked about the miscellaneous 1099. We talked about sole proprietors, keeping accurate records, and that you needed to do a Schedule C if you have a regular business activity, okay? And that all your income and allowable deductions must be included. Okay, look at that last line. All income and allowable deductions must be included. What do you think they mean by that? Must be included. Why would they put that in there? Anybody think of why they put that on there? It's a brain teaser. What did I say about Schedule C's? As far as clients and just the Schedule C in general.
It's self-employment.
Right. Bigger picture, though.
They're paying their own taxes.
Okay, bigger picture.
It's an honor system.
It's what? Honor system. Highly audited. Okay? That's why they feel the need to say, even from the IRS standpoint, all income and allowable deductions must be included. So when we get to the section about tax credits, some of that's based on your income. So sometimes you get more of a tax credit the higher your income is. So if you have higher income in a certain circumstance, and that's going to get you more of a tax credit back on a child, you could see how someone would be tempted if they had a Schedule C to say, oh, I'm going to get more back if I say I made $15,000 instead of $12,000, and I just have to write it here and I don't have to prove it. That's why they have us look at the standard of all income and deductions must be included. Because you will have people that will come in as you're recreating and talking and going through where, let's say, we're looking at their information they've brought in and we've looked at some of their credits and we've already kind of told them in general what they're looking like, because they'll say, oh, what's it looking like now? You claimed $15,000 whatever on your Schedule C, then it looks like you're getting back, $3,000. Oh, I thought of another deduction. Well, you put that on there, and then the refund goes down. And then they say, oh, do I really have to use that? Well, what's the answer?
Yeah.
Yes. Okay. People will do this. I've had people literally before that didn't really come in with as many records as they should, and they want to barter, to try to get to a number on their return. We do not do that. We do not do that. If I catch you doing it, we'll talk about it, and then if it happens again, I've had that happen a couple of times to me, and I've had people walk out. Now, that's not the norm, okay? But some people just think it's something that can be fluctuated and looked at as like flexible, and that's just not the way it should be. I mean, you should kind of know what your income was, what your expenses were, before you come in. Likewise, I've had people that, because of their deductions, have gotten down close to zero taxable income. Well, like all tax credits, there might be like what I like to call a sweet spot when I'm training people. This is like the sweet spot when we get to tax credits. You understand from here to here is when you get your most bang for your buck in your tax credits. But as your income goes back down, you don't get as much. If it goes under a certain point, you may not get any extra credits, and you don't get a refund, but you don't owe. You're at zero. So how do you think someone feels that normally gets a few thousand back if because of their extra miles they drove, they're almost at zero and they're not getting a refund? Do you think they're happy? No. Do you think that I want to take off some of those miles just so they can get a refund? Not really. So we've even heard in the past few years there were some stores with Liberty, they're not active anymore, that were recruiting homeless people to file fraudulent returns so they could do a bank product on the return, which is where we get paid out of the refund, to make money. So if you think about it, well, that was a really good idea. It's fraud, but it's like, wow, I would have never thought that I had time to think of that. Having people do fraudulent returns just to get paid from the IRS, but people do it. So we don't want to do anything like that. But yeah, that's why they're more highly audited than they used to be. That's why the last 3 to 5 years, they're putting more and more, burden on us as tax preps and owners and that sort of thing in this industry to be very vigilant about that kind of thing. But yeah, so it's a big thing that's harped on, and you'll see it when we start doing tax credits. So this is very, very specific and picky and that sort of thing. And all we can do is our due diligence. Remember from the beginning about the complete and accurate tax return? That's all we can do. Now, if y'all are thinking through your head, well, what about people that just go online and do what they want to do? What about those people? They get away with it, we don't. And 2 to 3 years ago, the IRS had said they were going to start putting in auditing mechanisms for people that do online returns, preemptively, to where they have to upload documents and, just like we have to have people bring in documents, because there's no way the IRS knows what they're putting in if they're just doing it on their own at home, But I don't think the IRS is there yet. So, sure the TurboTaxes and all the online softwares of the world, wouldn't be happy when they start doing that. Liberty does random audits of our online clients. We have an online portion. I think it's called e-tax or something. I'll have to tell you guys later what it is. But we have an online, pretty cheap version of our software that someone can self-file themselves through libertytax.com. We do get like a little royalty back on that if someone we know goes online and does their own. But Liberty has started auditing some of those. So I had a couple come in the last few years. They're like, hey, I was doing my own stuff online, and Liberty Tax says they need something from me. And so they sent them in here, and we had to collect documents, and it was a whole fun thing. But yeah, so that's something the IRS is going to be working on. Like I said, in the future, probably the next few years, they'll probably be more stringent. Because that's where a lot of the fraud comes from as well, is people self-preparing online, people having other people do it for them online, and then foreign and bad actors that hack and do all kinds of stuff. So leaves people open for things like that, for fraud. Each business has its own Schedule C. So if I have a salon business and a lawn business, they can't be on the same Schedule C. Okay? You have more than one Schedule C. Perfectly fine. Okay? Now, the more Schedule Cs you have on a return, probably going to eventually open you up for being audited. Okay? They might think you're a little too much of a busybody if you've got 4 or 5 Schedule Cs on your tax return. So, and we will do some of this practice next week. I'll pull some of these. We'll do those next week. And let's see. So if you'll look at that one that's stapled at the front of your notes for this week, if you haven't already kind of just glanced through it, there is numbers in there. You can kind of see how everything tallies down the line. And then towards the bottom, there is your profit and loss line. Looks like 29, I think, from here, tentative profit and loss. So that one that's filled out, that profit and loss would have rolled back to that Schedule 1, okay, if that were a real return. So that's kind of just an example there. Any specific questions before we move on to interest, capital gains, and other income? This next chapter is kind of a smorgasbord, a little bit of everything in this next lesson. It's kind of like they said, let's just put everything else in this lesson. It's really kind of oddball by itself. Any questions on W4, wages, Schedule C? Like I said, we'll do some practice ones next week. I think you'll really start to kind of understand a lot more when we look at them in application and not just with yes and no questions and quizzes and that sort of thing. Trying to go, anything else on those? So no questions? We've covered it all.
Yeah.
Honey, do you have any questions?
Nope.
No? Okay. All right, we'll go about 5-10 more minutes and then we'll take a quick break. Okay. So, I'm going to skip that. We're just covering a lot. Know that we're covering a lot in this lesson. Your little packet's like twice as thick as normal.
Yep.
And some of these are pretty simple things. You can just take notes on your packet as we go. Interest, okay? Interest income is unearned, right? We talked about that's growing for you in a bank or being paid to you. That's not something you went out, last week and earned that wage. It's unearned. Most types of interest are taxable. All interest must be reported. Interest over $10 is usually reported on a Form 1099 INT, which you should have one in those next few pages. It should say 1099 INT. If you do not, it accidentally got left out, but you should have one. I think I printed one out.
Mm-hmm.
Do you have one in your packet?
Number 13.
Number 13?
Yes.
You have one? Okay. Do you have one, Gustavo?
Yeah.
Okay. Interest and dividends. Okay. So 1099 INT. So as you're seeing, there's kind of a pattern with the way the forms look from the IRS, the income forms. 1099 INT, 1099, miscellaneous for Schedule C's. A lot of them will look like this. I hate to break it to you. Sometimes they'll bring in 1099s and they'll schedule box 7, Schedule C 1099s. They'll bring in interest forms. They'll bring in stock forms that don't have this formula to them. And that's totally legal. This is kind of the standard, but not all of them will look like this. So part of our job and part of what you will learn is if someone drops off a return or they come in and we're going through their paperwork, we may not even know what we're looking at. We may have to ask them, hey, which form is this? What is this exactly? Because some smaller banks, even some large banks, they don't always put it on something that looks nice and square and like a little IRS form. Okay? That may just be on a sheet of paper. It may say 1099 INT Arvest Bank, we paid out $30. That may be all that's on the page. Okay? Give or take some other information. So it may not always just look like that. So we also have to be careful when we're going through the documents that we don't miss them. Okay? Because they're very easy to miss on small things like this. So interest over $10 is usually sent to them on something of that nature. If it's over $1,500, it's going to go on Schedule B. Okay? Schedule B. Okay? Like I said, sometimes people don't even realize they're supposed to claim those sorts of things. So if those things come up in the flow of conversation with your clients, hopefully you'll be saying, oh, do you have those forms? Well, you're really supposed to claim that amount. Can you go get that amount and get that form from them? Can we call them and they email it to us real quick if you get on the phone with them? Okay. The main thing is, as you're going through returns, if there's things they didn't bring in with them, the number one thing is we want to try to close that return that day. Okay. We do not want them having to leave because there's always the chance if they leave, they won't come back. Okay. So anything we can get them to fax, email to us, screenshot to us, whatever the case may be, we want to try to do that. Okay. And these are just some of the ones sometimes people will forget. This one and then school forms for kiddos in college, those are the two biggest. Interest, some certain dividends, and then the school forms. So it is something we definitely can have them send over to us or email to our email. This year we're also going to have that new portal. I know I talked about that they can upload on if they left to go get it. And they may be able to upload it from their phone too to us. So that would be a good use for that if they forget it. 5 more minutes. Substitute forms may be used. I would say on substitute forms of any kind, we probably would wait till March, just because legally a lot of these forms have to be out by January, but sometimes people are late, they trickle in, they've misplaced it. Also, to get replacements or even know all the information, they may need to contact the IRS, and so the IRS is not even going to have that. Their act together till probably middle to end of March. So, substitute forms, we tread lightly with letting people substitute. Interest you can also have on what's called a K1. K1 is very similar to the I-10 in that we don't generate K1s, we don't generate I-10 numbers, but we can use them to file the return for them. So if they already have their K1 form, we can enter it in. We just don't generate them. They're generated by software for businesses and partnerships that we don't do. Okay? So most K1s, and this isn't, K1 is really just in here talking about interest, but I like to say that ahead of time. So if somebody were to call or come in, hey, I need to file my business return. Well, obviously the first thing we say is, well, are you that Schedule C sole proprietor? We can do those. Do you file an actual separate business return? We don't do separate ones. We just don't do them yet. Our new software may be different. I don't know. I don't know what I don't know. But in the old version, it was totally different software that we just weren't trained on, so we just never used it. And we get a handful every year that will ask about it. The other reason in the past we haven't done as many business returns is a lot of businesses want you to do year-round bookkeeping for them, and we just didn't have a need for it. We didn't have clients that needed that service. As we move to more year-round, it may be something we pick up on in the future, but we just haven't done it. But just know if they come in with the K1 already on the form, we can put those in. We just can't issue it if they don't have it. And if they know that someone else is done with it, they just don't have it, we can help them get the form. But we can't create it if they don't have it. Okay? Tax-exempt interest, there's also a line to report that on the 1040. Okay? To A, taxable interest, and I think it shows us here in a minute, right here. Taxable interest is over the top of that 1040. Okay? And then tax-exempt interest. I've never had anyone bring in tax-exempt interest in, so I can't really speak to that myself, but I have had them bring in a lot of taxable interest. Okay? Super easy to enter in. You literally just put in, in our software on the Schedule B, put the name of the company and the amount. It's not difficult at all. Okay? Very, very simple. Like I said, it's so simple, it's one of those things sometimes we forget it. Well, it's not as big as the W-2s right in front of us, and because sometimes the amounts are so small, easy to forget. And sometimes you'll have some clients that will have interest from a few places, so we'll kind of accidentally leave that out. And so we'll show you as we get on the computer how we keep up with what we've put in and that sort of thing. But just know taxable interest is important, and a lot of people do get it. We have quite a few that will bring it in with them, and they need to report it. Okay, let's take a quick break. I'm going to turn this off here if it's not already closed out on me.